What's up, everybody? This is Jimmy with Trading Decoded. It is December 8th, 2025. It's 3:21 in the afternoon, and I'm just getting around to making today's video. Today's video is going to be relatively quick. Why? Because, well, I understand that your time is valuable, it's important, and you don't have a whole lot of attention span or time to be wasting listening to me yip yap. So I'm going to focus more on specific topics that we found useful throughout these trading days. Today's topic is going to be why it's important to buy pullbacks more so than breakouts. And I'm going to show you several examples as to how that works, why you should be patient enough to wait for it, and, well, how you can make money with it. But without further ado, let's go ahead and look at one thing first here that I want to show you guys. I'm trying to bring an emphasis to our community members, not because they need to be special or feel special or anything, but just to show you that you don't have to believe me in my numbers and my returns. That's irrelevant. I don't even put that stuff in my videos, although I'm being told that I should. So I'm going to share with you other people in our community's success stories. This gentleman right here is a very good friend of mine. He's awesome. He's been a longtime member of the community. And read here, and not tooting my own horn, but I had an 85.7% win rate for the month of November with a total of 21 trades, currently sitting on a 90.8% win rate with 11 total trades so far in December with a max of 3 trades per day. I used to trade like an asshole, meaning he used to trade all the time and recklessly. And this shit makes sense, guys. Jimmy D is on to something here. Now, he's been with me for a while, but he didn't start to implement what he was learning with me up until relatively recently. The numbers speak for themselves, guys. You're talking about numbers that most people say is impossible, but I can show you case after case after case. People, not me, don't believe me, okay? Don't believe what I'm giving you. Don't believe my win rate is above 90%. Just listen to people who have nothing to gain by sharing their information, okay? Like this gentleman here, we have several others, okay? So it is possible. You just got to get out of your own way, and you've got to learn from the things I'm trying to teach you in these videos, okay? It works, and trading more does not equal more money. Now, with that said, our call put scenario today was we wanted to take calls if Qs could get over 628.20. We wanted to take puts if the Qs could get below 626.89. Pretty large range, but because we had no catalyst this morning, we were hoping to get some movement, but we weren't sure which way it was going to go. Leading into the open, we were prepared for puts simply because we were putting in lower highs leading into the open. That's how we get ready for the trade. Doesn't mean you have to take it. Doesn't mean you have to do anything about it. Now, in today's situation, it was kind of good that we had a wider area because it gave the chart enough time for us to be able to assess the fact, in the rare occasion that it is very rare that this happens, ADD was overpowering Qs this morning. And I say that because we did dip right down to the put line, bounced right off of it, and the Qs took off to the upside, exactly where we hoped it would go, which was through that resistance and at least to the orange dotted line, but hopefully to the pink line. No matter which way you cut it, it worked. My Qs traders made money on that trade. Now, my SPY traders, and I said this during the printing of the 930 candle, said, guys, I'm not going to be taking the call scenario. I am recognizing that SPY is reacting more to ADD today than it is the Qs. So I have to wait for the Qs or ADD to start going up or sideways, and then I can follow the Qs. Or I've got to wait for the Qs to stop going up, and if ADD is still going down, then we take puts. Okay, very simple concept, very easy to understand, requires patience, but you had to be quick about realizing that ADD was the winner this morning. And because of that, we weren't getting into the call scenario. At least I wasn't. But again, my Qs traders did take advantage of that move and they made money. I was not one of those because I trade SPX, as you know. So I said, while we were running around up here after this 931 candle, I don't know why my mouse is doing what it's doing, guys. I'm sorry. But this 931 candle here, big wick on top. I said, guys, that's a seller's candle. I like the fact that the Qs are struggling, but I personally will not be comfortable taking puts unless we can close back below the support we just closed above. So old resistance, we closed above resistance. It looked like it was support. I liked the wicks on top. I liked the fact that ADD was going down. I liked the fact that SPY kept going down. So I wasn't opposed to puts. I just needed the Qs to tell me it was time to do so. Now, could I have gotten in on any of these big wicky candles? Sure. But if that support holds and it continues to go up from here, even if ADD is going down, SPY is going to have a much more difficult time going down. So the rule is, let's get below that support, what was resistance, turn to support. If we can close below that, I'm looking for the move to continue down to this orange line. Very simple concept, very clean and clear suggested trade setup. Okay, this is what we're looking for. We broke the support, we closed below it, okay, or stayed below it. Once we got below it, we actually opened below it. We gapped down there for a second. ADD was still printing red. SPY was already putting in lower highs. I'm like, I'm getting puts. I'm going for puts. And I held until we hit the alert. Okay, so we got all the way down basically to our put line down here. And that's why I took myself out of the trade. Now, that was not a huge win. I mean, dollar-wise, it was beautiful. It was a 25.92% win. So almost 26% win. I'll take that every day. And I was done working by 9:42 this morning. What other job do you get to wake up, start it at 9:30 in the morning, and be done 12 minutes later? The market provides you that, as long as you learn how to do it. Now, with that, we continued to put in lower highs, we continued to break supports, and we continued to move down. And then we got ourselves into a situation where we got a divergence. So Qs were trying to go down, ADD stopped moving down. In fact, it was moving sideways. We called this out too. I said, guys, watch out for those smaller candles on ADD. That might be buyers coming in to try and pick the market back up. And lo and behold, we started to chop sideways on the Qs. It was in a channel here, we'll call it. And ADD was moving up. And it was during the time, I want to say it was in the 10:04, 10:05 range, somewhere in here, where I said, guys, at this point, you should have defined areas, or you should already know what trade you're looking for and what needs to happen in order to justify taking those trades. Okay, this is the planning process. These are not trades that sneak up on you. In this case, I said, I would like to see the Qs below not only this red box, but the second orange line here, okay, at 625.48. Furthermore, I would like to see SPY far enough away from the pink line or below the pink line so that if we got to it, we could, be prepared to skip it. If SPY was on the pink line when this happened, I wouldn't have taken the trade. Now, I didn't take this trade, but this is a trade we spotted a solid 15, 20 minutes before it became a thing. And at the same time, ADD had started to roll over and was starting to print red again. And the first time all three criteria were met was right here at 10:23. Now, by the time we got down here, and I know this because several people took the trade, it was a 45 to 50% win with very little worry, concern. Look at the drop on SPY, guys. When Qs and ADD are moving down at the same time, SPY has no choice but to go down, and it goes down pretty quickly, pretty comfortably, okay? But not everybody took it, and if you stayed in it, because obviously we closed below the support, we're trying to get down to the next support, which would have been the pink line. It didn't make it there. If we are pulling back to the support that has failed, you want that to be resistance to justify staying in the trade. Now, if we're coming back to test that resistance and ADD is printing green, get out of the trade before the candle close. We had a long discussion in our room today about this, okay? Higher lows. Don't buy puts off of higher lows. How do you know if it's a pullback, Jimmy, versus a reversal? If there's a higher low put in before you make it back to the resistance, the next one in line, don't buy your puts. Assume that that's a reversal, not a pullback, okay? Now, here's what's happening here. We're putting in lower highs. ADD is moving down. We're putting in lower highs. Now, Delane, if you're out there, congratulations, my friend. You crushed it today. Delane bought this pullback because it was a lower high and ADD is printing red. That is an A+ setup. We want to buy this pullback. We're going to assume we're going to break this support and head down to the next support. Guys, he bought the pullback, lower high on SPY, off of lower highs on Qs, ADD's red, let's go. Now that was a good, clean trade that only lasted 3 minutes. That probably was a 25% win, okay? Then we pull back to resistance. As long as you're putting in lower highs, guys, the only trade decision you should be focusing on is puts. And then you have to understand when to take those puts. If ADD is printing red when you are pulling back to a resistance, and yes, a trend line is a form of resistance, then you take the risk. You don't know what the outcome is going to be regardless. But what's good about buying a pullback is several things are in your factor. Number one, you're at a resistance. Sellers reside there. Sellers live there. Okay. Number two, it provides you a nice tight stop loss. If we blow through that line, you get out of the trade. Assume it's going to fail. Okay. And number three, while we're pulling back to a resistance, your contracts for your puts are going to be cheap. Cheaper than they are when you buy the bottom, obviously. Okay. So what's going to happen on a pullback? Well, let's check ADD. Are we trending down? The answer is yes. Are we at a resistance? The answer is yes. Are we coming off lower highs? The answer is yes. Should we assume we're going to break support because of the lower highs? The answer is yes. Where are we expecting it to go? At least to the next support down, which is the pink line. If we get through that, we're hoping to make it to the next support down, which was the orange line. If we get through that, we're hoping to make it down to the next support. Now, that didn't happen, but that's not the point. Point is, you would have made good money in a short period of time on a very clean move if you just followed the rules. So it's cheaper to enter, it's quicker to know if it's not going to work, and you have known targets below that we've tested throughout the day. Okay? Even if you were taking it from resistance to the next support, that's still an okay move. You went from 623.95 to 624.50. I mean, it's still a 50-cent move, even if it stopped at the most recent support, which was this level right here. Okay, so these are the things we're looking for. Now, right here, this is a wedge setup we were talking about. If we close above the downtrend line, only if you close above the downtrend line should puts no longer be an option. But if you're putting in higher lows like we were here, we don't want to buy calls or puts because you're in a wedge. You don't want to buy anything new in a wedge. Well, Jimmy, if we break out of the wedge to the downside, should we buy puts? Well, that depends. It depends on if there's room to go to the support after the break of the wedge. In this case, there was not enough room. And why is that important? It's important because if you get into this trade and you get in and you get down to that support, you look at your P&L and you say, well, I only made 3% on that. That's not enough money. And you're right. It's not enough money to take or justify the risk that these trades cost. So what do? You don't say, I better respect the chart, because the chart is something I have zero control over and it dictates everything we do in our trades. But no, instead, your greedy mind will take over and say, but I need more than 2 or 3%. I'm going to hold on to this. And you hold on to it, and then it pulls back on you, and then congratulations, you're a Holden Hoper. Guys, this is how it works. What I want you to pay attention to is how often pullbacks to support or resistance with ADD confirming your entry reasoning. Okay, so wait for all things to be true. You're below a trend line, you're trending down, you're putting in lower highs, you're pulling back to a resistance, you check ADD. If ADD is printing red, you take the risk. If you close above the trend line or above the resistance, you get out of the trade, you keep your losses small. Your target is the next support down. If it's a lower high, expect to break that support and head down to the following one. That's the strategy. Guys, we do this every day, every single day. Okay? It's the same routine. You just got to get comfortable implementing the routine. It's not that it doesn't work. It's just that you're not comfortable with it. Some tell you it's impossible to trade without indicators. It's impossible to have a high win rate. You know who says it's impossible to do those things? People who haven't yet achieved those things. It's not impossible. Okay? You can do it. You just got to give it a chance. Play responsible position sizes. Take the right setups. Know which trades to skip. Don't let greed take over. Don't overtrade. Don't be impatient. It's very difficult to get good at this because of the emotional side of it, not the technical side of it. Overtrading is costing you way more money than you even know if you're not paying attention. I'm telling you, you probably are more successful on the day you take fewer trades than on the days you take more trades. Start keeping track of it. Use TradeZella or something. Keep an eye on it. It's wild. The number of people that I have convinced to trade without indicators and take fewer trades, there's no shortage of them telling me how much more comfortable they are doing or feeling in their trades and how much better they're doing as a result of those two changes alone. Guys, we're not here to take 1,000 trades a day. Any successful trader will tell you to get in, take the risk, get your money, and get out. Go do something else. Come trade something later, tomorrow. Okay? Don't swim around in the pool of sharks for too long. With that said, we're going to wrap it up. I hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join my Discord community, well, there are links down below. I'd love to have you. And I know I said this one was going to be relatively short. I kind of have a talking problem. I apologize. I will work on that. I am going to start to pinpoint these videos so I'm not blabbing around. It's been brought to my attention. I'm asking my community members how I can be more effective, both in these videos and in Discord. And I'm going to try and use their feedback as a way to make these things better for you. Okay? So I hope you all did all right today. I hope you had a decent day. Till tomorrow. Oh, buy my book. It's right here. Other than that, till tomorrow. I love you guys. See you.